Fifth semester BCom examination, January-February 2025. Principles and practice of auditing. Section A, 2 marks question. Answer any 6 of the following. First one, what do you mean by auditing? Auditing is a careful examination of process, system, or financial records to ensure accuracy and compliance. It can also use it to identify and prevent errors and frauds. What is wages? Wages are the money an employee receives for the work they do from an employer. Wages are paid according to the amount of time worked. What is intangible asset? Intangible assets are non-physical assets that have value to a business. They can include intangible property, brands, goodwill, etc. When can an auditor get extra remuneration? An auditor may receive extra remuneration if they incur additional expenses or are provided with the additional facilities while performing an audit. What is qualified audit report? In qualified report, the auditor believes that overall financial statements are not fairly stated, or a qualified audit report is a report that an auditor issues when they can't give an unqualified opinion on a company's financial statements. What is error of omission? These errors are said to be committed by not recording a transaction either in a book of original entry or in the ledger book. What is audit notebook? An audit notebook is a book maintained by the auditor staff in which large variety of matters observed during the course of audit are recorded. It contains information which require future qualification, explanation, etc. What are floating assets? Assets are assets that change in value or quality over time. Section B, 4 marks question, any 3. Answer any 3. Briefly explain the characteristics of auditing. Fraud and error detection. Its main objective is to uncover fraudulent activities or financial records errors. Systematic procedure. Auditing follows a methodical approach to examine financial records, ensures truth and fairness, verifies that financial statements accurately reflects the business affairs, compliance with standards. Auditing ensure adherence to accounting standards in preparing financial statements, performed by qualified auditor. Auditing is conducting by the professional with the expertise in accounting procedures and legal formalities. Briefly discuss internal check as regard to wage payment. Wages are very important item of expenditure. The system of internal check for wages should be devised in a planned and careful manner. There are great possibilities of fraud in a concern employing a large number of workers. A sound system is internal check in payment of wages or avoid errors and frauds which may be revealed from time and piece work wages record, maintenance of wage records, time record, piecework record, overtime record, pass out record. Time records. The person in charge maintains a record that documents the admission and exit times of each worker. The supervisors or manager of each department are responsible for maintaining records pertaining to the amount of time spent by employees. Piecework records. The responsibility of maintaining this record lies with the supervisors or managers who diligently document the precise tasks performed by each employee. Ultimately, the salaries are determined based on the records kept by the foreman and the work cards. Overtime record. The pre-approval of overtime should be granted by an authorized person. It is recommended that employees provide employees with the overtime slips that include the workman's name and identification number. pass out records. It is essential that workers are not permitted to leave the premises of the workplace unless they possess formal authorization. Discuss the methods of valuation of assets. First one, cost price method. This approach involves the assessment of asset value based on the initial purchase price of the assets. The term price in this context refers to the cost associated with obtaining an asset, including any cost made throughout the purchase process. This approach is one of the most straightforward methodologies for asset valuation. Market value method. Asset valuation may be conducted by considering the market price of the asset. However, if assets with similar characteristics are not readily accessible within the market, it becomes significantly challenging to ascertain the value of those assets. Therefore, there are two distinct methodologies. The following items are as follows. Replacement value method. The term replacement value refers to the monetary worth at which an item may be substituted or replaced. This particular approach to asset assessment is applicable just in cases when the replacement is one of the same item. Net realizable value. The term market value refers to the price at which an item may be sold, with the cover that any expenses associated with the sale of such assets must be subtracted. Standard cost method. Certain commercial organizations may establish a standard cost for an asset by drawing from their previous experience. The assets will be valued and shown in the balance sheet based on the standard cost. Book value method. The term book value refers to the record value of an asset in business financial records. Typically, it is calculated as the original cost of an asset minus an accumulate depreciation. Going concern or historical value or conventional value. This value is equal to the cost reduced by a fair amount of depreciation that has been incurred. Any potential price fluctuations in the assets will not be factored in since the assets are obtained only for utilization inside the company and not for the purpose of resale. Last method, scrap value. This approach will demonstrate the quantifiable worth derived from the disposal of an asset as scrap, or alternatively it may be donated as the monetary value that can be accrued from the asset if they are sold as scrap. What are professional qualities of an auditor? First one, integrity. A professional accountant should be straightforward and honest in all professions and business relationships. Objectivity. A professional accountant should not allow bias, conflicts of interest, or undue influence of other to override professional or business judgment. Professional competence and due care. A professional accountant must maintain professional knowledge and skill at the level required to ensure that a client or employer receives competent professional service based on current development in practice, legislation, and techniques. Confidentiality. A professional accountant should respect the confidentiality of information acquired from professional and business relationship and should not disclose any such information to third parties without proper and specific authority unless there is a legal or professional right or duty to disclose it. Professional behavior. A professional accountant should comply with relevant laws and regulations and avoid any actions that discredits the profession. What are the types of audit report? Explain briefly. First one, clean or unqualified report. Clean or unqualified report will be given by the auditor if the auditor is satisfied that the accounts, balance sheet, profit and loss account, and cash flow statement to represent a true and fair view and they are prepared in conformity with the accounting principles and statutory requirements. Qualified report. In qualified report, the auditor believes that overall financial statements are not fairly stated. The reasons for given qualified report are as follows. The book of accounts, profit and loss account and the balance sheet do not represent the true and fair view of the state of affairs and results of the operation due to lack of conformity with the accounting principles and statutory requirements. The auditor is not able to verify the value and existence of certain assets. The information requested by the auditor is not furnished. Proper books of accounts are not maintained as required by law. Adverse or negative report. When there is sufficient basis for the auditor to form an opinion that the whole accounts and financial statement do not present a true and fair view of the financial conditions and results of operation, the adverse or negative opinion will be given. The adverse or negative report will be given on the following grounds. When the auditor is not satisfied with the true and fairness of financial statements, non-conformity with the general accepted accounting principles, mistakes, discrepancies, and material misstatement in financial statements, omission of a material disclosure. Disclaimer report. The auditor may disclaim or refuse opinion on accounts, profit and loss account, and the balance sheet when he does not have sufficient information to base his opinion. In the scope and opinion paragraph, the auditor should give disclaimer information. This may happen on the following grounds. The auditor has not been able to obtain sufficient information to form his opinion. The audit examination is not adequate to form an opinion. There are some material under determined item in audit examination. Section C, 12 marks question. Answer any three. First one, explain steps to be taken by an auditor before commencing a new audit. First one, receiving the appointment letter. Generally, the auditor of a company are appointed by the shareholders in annual general meeting. Therefore, an auditor should get and examine the copy of resolution passed by the shareholders in the general meeting to confirm and should receive the appointment letter before starting a new audit. Communication with the existing auditor. In case of an audit proposal is for an existing business, the proposed auditor should communicate with the previous auditor to know whether he or she has any objection to raise. It is also an official requirement as per the Institute of Chartered Accountant Act 1949 and as to authorized by the Chartered Accountants. Acceptance of the appointment. If the auditor is satisfied with the communication with the previous auditor, then the auditor should confirm his or her acceptance through a letter of acceptance. Ascertaining the scope of audit. An auditor should know the nature of audit of his client before starting at work. If the nature of audit is statutory audit, the scope of audit work should be in the accordance with the statute. In the other types of audit, an auditor should discuss with his clients the name of audit work to be undertaken. Adequate knowledge about the organization. Before determining a basic approach to audit, an auditor should gain adequate knowledge about the organization. He must familiarize himself with detailed information of the business, its activities, and should visit the locations at which it operates. This will help him to understand the nature of transactions which are recorded in the books of accounts. Knowledge about the accounting system. The system of accounting employed by the client should be examined by the auditor even before taking up the audit. He should obtain a list of all books maintained by the organization for recording its accounting transactions. He should also acquire complete information about the internal control system adopted by the organization. Knowledge of technical details. The auditor must ensure that he has grasped all the technicalities about the business. Only then he will be in position to identify the transactions of auditing records. Complete list of principal officers. The auditor should collect a complete list of all the principal officers with their names, duties, responsibilities, and powers. The auditor should also collect their fishermen's signatures. Observation of the previous auditor's report. If the company is not a new one but old, then the auditor should also inspect the report of previous auditor. This will help him to understand the nature of accounts, important areas where the detailed check is required, and the techniques to be used to conduct the audit work efficiently can, can be identified. Instruction to the client. Once all the above steps are completed, the auditor should issue clear instruction to the client that the account should be finalized and kept ready for audit. Explain internal check as regard to cash purchases. Internal check with regard to cash purchases. Requisition. The procedure for issuing purchase requisition should be specified the head of the department who is in the need of goods and should fill in a requisition slip duly signed and then should be send it to the purchases department. The details about the quantity is quality and the time by which the goods must be supplied be clearly mentioned in the requisition slip. Enquiry. Purchase department makes an inquiry about the terms and conditions of purchases from the different suppliers. For this purpose, tenders are generally invited, but who shall open and accept the tenders should be clearly specified as at a rule. The lowest tender should be accepted and accordingly a decision to be taken. Purchase order. The purchase department places order which should be recorded in the purchase order book. 4 copies of purchase order should be prepared. 1 copy will be sent to the vendor, second to the store department, third copy to the accounts department, and fourth will be the retained by the purchase department itself. A responsible officer should review the purchase order before signing by the authorized person or director. Receipt of goods. On receipt of goods, the purchase department should be properly inspecting them and thereafter an entry in the goods inward receipt book. The sum should be sent to the stores. Concerned department should be informed about the receipt of goods. Making the payments. The purchase department should truly check the invoices and send the same to accounting department for payment. The accounting department should compare the invoice with the purchase order and incoming inspections report and should also verify the calculations. The accounts department should enter the invoice in purchase book. Only responsible official should draw check for the payment of invoice at the time of signing. A signing authority must be verified that correct payment is made. Explain the rights and duties of a company auditor. Rights of a company auditor. Right to access to books of accounts. Under section 143 subsection 1 of Companies Act 2013, an auditor of a company has a right to access at all times to the books of accounts and vouchers of a company wherever they are kept. Right to obtain information. An auditor of a company has right to obtain from the directors and officers of a company such information and explanation as he may think necessary for the performance of his duty as an auditor. Right to correct any wrong statements. An auditor of a company has a right to correct any wrong statements made by the auditor relating to the accounts to be laid before the company in general meeting. Right to receive notice. An auditor of a company has right to receive notice and other communication relating to any general meeting in the same way as a member of company whether accounts done if they are discussed or not at the that meeting. Right to visit branches. An auditor of a company has right to access to branch accounts and can examine the branch accounts are examined by some other persons. Right to seek legal. An auditor has right to take legal, technical or expert advice on any other matter relating to the business in order to perform his works satisfactorily. It may be noticed that no doubt the auditor has the right to seek legal, technical or expert advice. Next, duties of a company auditor: duty to report, duty to make certain inquiries, duty to sign his audit report, duty to assist investigators, duty to give a statement in prospectus. Duty to report. Under Section 143 of Companies Act 2013, an auditor of a company should make a report to the shareholders on accounts examined by him and on every balance sheet and profit and loss account laid before the company in the general meeting. Duty to make certain inquiries. Under Section 143 subsection 1 of the Companies Act 2013, an auditor of a company should inquire whether the transactions of a company which are represented merely by the book entries are not prejudicial judicial to the interests of the company. Duty to sign is audit report. It is a duty of an auditor to sign the audit report prepared by him. In case of a firm of auditors, any partner of a firm should sign the audit report. Duty to assist investigators. It is duty of the auditors of a company to preserve and produce all books and papers relating to the company under investigations to the investigators or inspectors and to give them all assistance in connection with the investigations. Duty to give a statement in prospectus. A prospectus issued by an existing company should contain a statement from the auditor of a company relating rate of dividends paid by the company for each of the 5 financial years preceding the issue of prospectus. Explain the verification and valuation of first one, land and building. The auditor has to examine the title deeds of a property owned by the client and confirm that the same is freehold. If the property has been purchased during the year, the auditor has to examine the correspondence with the broker or solicitor in details. When a building has been constructed on the freehold property, the same is to be verified from builder's bill or architecture certificate. Where the title deeds are deposited with the mortgage on a mortgage, then a certificate from him to that effect is to be obtained from verification. Next, plant and machinery. Nowadays, as per provision of Section 227 4A of the Companies Act 1956, every company is required to maintain fixed asset register showing full particular including cost, location, depreciation details of purchase, expenses capitalized, etc. Therefore, the auditor should ask for such a register maintained by the client and see that all items of plant and machinery are recorded properly, given full details. As per the provisions of some same section, all fixed assets are required to be physically verified by the management. Therefore, the auditor should inquire whether such physical verification was undertaken or not. If yes, he should ask for necessary papers pertaining this to the same. If there is any discrepancy, reasons for same should be asked. Any new purchase made during the year are to be verified with reference to the purchase invoice and other papers regarding installation of same. Value of plant and machinery as shown by the fixed asset register should tally with the ledger account maintained in the financial books. Creditors. The creditor should ask for the schedule of creditors and those balance should be checked with the following respective ledgers accounts and statements of accounts received from a creditors. The purchase ledger should be checked with the books of original entry, invoiced, credit notes, etc. The auditor should check the whether all credit purchases for the year have been taken into account. If a client maintained a provision in respect of discount on creditors, it should be checked with reference to the creditors accounts. Contingent liability. In case of outstanding liabilities, the auditor should obtain a certificate from a responsible officer of the company stating that all expenses become payable have been brought into account. You should see whether necessary provision for all the outstanding expenses have been made by the checking receipts and other vouchers. You should compare the expenses shown as unpaid during the current year with those of the last year, and if he finds any difference, the same should be inquired into. Last one, discuss the audit procedure of banks. The audit procedure of banks include the following steps. Bank audit is a mandatory procedure to be followed by the all banks under Banking Regulations Act 1949. Therefore, the auditor should check all the financial records and check whether banks are operating according to the mentioned regulations or not. The statutory auditor, considering the declaration of indebtedness, engagement risk, and team discussion, the auditor should identify the risk of financial misstatements and risk associated with it. The auditor should verify all the documentation and ensure that they are placed safely. The auditor should examine loans and advances and warning signs of non-performing assets. The auditor should examine the non-performing asset management and reports on discrepancies. The auditor should observe all the tax returns. The auditor should review the quality of companies conducted at the banks. The auditor should observe the report of bank of previous years. Auditor should inspect all the physical assets, records and documents of the banks.